Hi traders, a third consecutive red week drove the S&P 500 down 2.14% and 8% from the start of 2016. Now at the same time, and when we look at the Chinese market and the European market, we're seeing those markets down 20%. So technically in bearish territory. Big question, of course, is whether the S&P 500 or Wall Street is going to join the Chinese and European market. And that's, of course, a very hard question to answer. So far, we're seeing the fear driving the markets down. However, the fundamentals of the US markets are not the same. Meaning, if I base my opinion on the fundamentals, I would say no. However, again, psychology drives the market sometimes stronger than fundamentals. So last week I anticipated the fear to continue, anticipated the market to continue down, which they did. This week, as it looks to me, the fear or most of the fear is over. So I would look for maybe a relief or maybe even a pullback. Let's take a technical look at the markets. When we take a technical look at the market, we can see that the daily of the S&P 500 drove us down exactly to the blue line, which I anticipated it to come to last week. Now, this is the support of August, and at this point, you could expect some buyers to come in, and the market did stop there. However, if we want to understand the market, we need to take a broader look at the market, and here's the S&P 500 monthly. So we can see the drop down in 2000, the 2008 crash, and right now 2016, which is not yet a crash. However, we can see that the next support level, if we break down the 1800s, will be at around the 1600. And to my estimation, there's a good chance that we will visit this area. Let's see last week's stock picks. I picked two stocks last week. So the first one for long, CPN, did not trigger. It did not move over the 1470, so we do not have a trade in CPN. However, the second one did. Amazon broke down under 605 and did great. Problem is, I lost money on this trade. And the reason is because I never have more than a 3% stop loss. And in this case, Amazon did trigger, however, did move up 3.4%. That's exactly to trigger my stop loss, and then continued down as I anticipated, but without me, and I'm out of this trade. Let's pick two stocks for next week. My first pick for next week, and just a reminder, we have a short week starting on Tuesday, is Edison over $68. Now, as you can see, Edison has a very nice breakout formation, and that's the time where the whole market is crashing down. So, in fact, Edison looks great. Now, Edison, with the well-known company established in 1884, looks great technically. It's a good fundamental business which supplies electricity for millions of users in the New York area mainly. So it looks good for a long. That's my first and only long pick for the week. The second one is Yum Brands, and that's for short. I would short Yum under 66.69. Now there's a very nice formation here, and that's the weekly of Yum, because you need to see the weekly, again, the broader picture. Yum looks great for a breakdown here. So two picks for next week, one long, one short, and hope for the best, and see you next week.